Hello and welcome to Business Incorporated. I'm Temple Ashaju. Now coming up on the show today, Egypt's annual inflation falls to 3.4% in August from 4.2% in July. South Africa's power cuts weigh on miners' investment decisions. And Air Namibia plans 50% cut to wages of some workers. Let's kickstart the show with intraday market numbers, which were all positive here in Africa. And South Africa is number one, where the JSE was up some 0.51%, while Nigeria's main index reversed the negative trend and was up 0.11%. Elsewhere, Egypt's EGX30 surged 1.23%, and Kenya closed positive on Wednesday. And in the Middle East, major markets were mostly positive except Dubai's main index, which declined 0.14%, while the Abu Dhabi index added 0.23%. Elsewhere in the region, Saudi Arabia's index rose 0.73%, while the Qatari index advanced 0.53%. And over to Europe now, where stocks were a little bit volatile this morning ahead of the European Central Bank's latest meeting on monetary policy in the Eurozone. Conrad's standing by to give us more on this. Hey, Conrad, the European Central Bank, that's the ECB Governing Council, has met in Frankfurt today. Of course, for the financial markets, this was an important meeting. Also because recently the US Fed softened its position on inflation. Bring us up to speed with all of that conversation updates that we have from the meeting, please.
Well, Temple, the European Central Bank has managed to communicate that it is reliable, that it does not come up with new surprising measures or policy changes without preparing the market. So the fact that today's interest rate decision and description by the ECB is totally unchanged compared to the last meeting in July is the news of the day. Interest rates remain unchanged. The European Central Bank continues to buy bonds to the amount that it had previously communicated. One thing the ECB has not changed is also worth mentioning, and let me quote this. The Governing Council expects interest rates to remain at their present or lower levels until it has seen the inflation outlook robustly converge to a level sufficiently close to but below 2%. End of quote. And that is worth mentioning, as you said, because the Federal Reserve recently has weakened its consumer price inflation target of 2%. But the European Central Bank remains committed to this target. Of course, the discussion, what happens when consumer price inflation rises above 2% is totally academic. Because, last month consumer prices did not increase, but they contracted in the countries of the euro.
Right, Conrad, let's talk a bit about Africa-Europe relationship here, and that's the link that Ngozi Okonjo-Iweala, a former minister here, has actually given us. She's one of the front runners to become the next head of the World Trade Organization, but she says that poorer nations have lost faith in the trade body and the times of business as usual are totally over. How important are those statements for people where you are? And what's Germany's financial community making of her candidacy? Of course, she is a former finance minister right here in Nigeria.
I can tell you that really the process or the procedure, how the new Secretary General of the WTO is being found, is being closely monitored by many people here in Germany, in Frankfurt, Germany's financial capital, but also, of course, Berlin, the capital of our country. And this is also because Germany, of course, is one of the countries that benefited a lot from globalization and the way how globalization is managed, whether it's fair or not, whether nobody is left behind. That's the job of the WTO. And of course, it will be important to get the Americans back in the game. Under Donald Trump, the US has fiercely criticized the WTO. Trump has not done a lot to help the organization function. And in that regard, it's really important that Ms. Ngozi Okonjo-Iweala in this interview to The Guardian said, and I quote this, the US has a real frustration that its issues are not being taken on board. She thinks the US have a point, and we need to get the Americans to stay in, and we should work with them. And that is really a position that many people here in Germany have as well. So I can tell you that the candidacy of the ex-finance minister of Nigeria to become the new chief of the WTO, that's really an idea that many people here in Germany are favorable of. Of course, there are some who say that maybe Lvmh would be the better candidate to, convince the Americans. Lvmh, a conservative politician from the UK. But given the hassle that we in Europe have with Brexit, it's very unlikely that lots of Europeans would support him.
All right, thank you so much for that update. But let's move on to corporate disclosure or some corporate news where a French luxury goods company, Lvmh, abandoned its $16 billion agreement to acquire the famed New York jeweler Tiffany, saying that the French government had ordered it to break the deal. But how much of a mess is this actually to the investing community?
A mess, I can tell you, and it's a mess that leaves many questions open and many things to speculate about. What I can tell you as a fact is that this deal has been put into question for quite a while now. Lvmh has been, grumbling that they want to renegotiate the deal. And the reason for this is that since they signed the deal last November, the profit outlook of the luxury sector in general and Tiffany in particular has changed. It's now much worse than it was in November. And the reason for this is, of course, mostly the corona recession. And it's not so much the transatlantic trade disputes. The problem for Lvmh is that in M&A, in mergers and acquisitions, you have contracts. Lvmh cannot really simply snap its fingers and change the conditions of those contracts. So now Lvmh is really focusing tedious and costly legal case in the US state of Delaware. That's where Tiffany is incorporated. For investors, of course, the big question is, will both sides be able to put down the guns and maybe come together and team up anyway? Or is there maybe another suitor out there, another company interested in taking over Tiffany or merging with it?
Right, Conrad, thanks a great deal for those updates. I appreciate them. Conrad, do have yourself a lovely day ahead. Now let's take a trip to London where Juliana Olayinka is standing by to give us updates from the United Kingdom. Hi, Juliana. We know that the FTSE 100 was lower by 1% earlier this morning, with every sector recording declines. But how are the markets performing at this point? Is there some sort of a recovery?
Not really, still in negative territory at intraday, although the mid-cap index shares, the FTSE 250, has a slight gain. The sentiment really appears to be coming from the tense talks, the tense Brexit talks. We've got a lot of EU officials that have descended upon Downing Street, and traders a little bit nervous about the prospect of a no deal. And then, of course, last night we had that bombshell announcement by Prime Minister Boris Johnson saying that there will be a reduction of the easing lockdown, and that's also made a lot of people nervous. So the FTSE All Share is down 0.57%, the FTSE 100 is down 0.84%, and the FTSE 250 is up 0.04%. In currencies, the pound is down on the US dollar by 0.07%, down on the euro by 0.41%, and down on the Japanese yen by 0.12%. It's worth mentioning as well that the supermarket chain Morrison's, they announced their year-to-date trading report, and their sales are down. Well, their revenue is down 25.4%. So they're part of the leaders of the FTSE 100 fall alongside Tesco's and Sainsbury's. Banks are not doing too good in the UK at the moment. HSBC, Standard Chartered, Lloyds and Barclays all down at intraday.
And maybe the comment from the former Prime Minister, Gordon Brown, has a contribution to that as well, because it relates to the BOE. We know that Gordon Brown has attacked the Bank of England for failing to place enough emphasis on jobs, as he called for a rethink of the model of independence, which he created when, of course, he was in charge of, as the Prime Minister over there. Of course, we know he did a lot for Threadneedle Street in the late 90s or thereabout. But what more did he say? Can you bring us more on that particular development, as well as have we heard any reply or response from the Bank of England?
No, we haven't heard a response from the Bank of England, but it's much simpler than that, actually, Temple. It's not really an attack against the Bank of England. He's asking for assistance for the Bank of England, but really what's driving this new campaign, and the campaign is actually called Alliance for Full Employment, is the furlough scheme. It's coming to an end and actually ends on the 31st of October. And I think Gordon Brown, the former Labour Prime Minister, is the first to pick up on the fact that that is Halloween. And he says that the end of this scheme is going to unleash a horror. His words, not mine. What he is asking the government to do, and by the way, this has been backed pretty widely. It was trending in Britain on Twitter all morning, and it was also backed by the mayors of London, the first ministers of Wales and Scotland and others. And now, over the past couple of months, we have seen countries like France and Germany pledge to extend their own furlough scheme. Of course, it wasn't identical to the furlough scheme here in Britain, but they have agreed to subsidise the most hard-hit sectors for another 2 years. That's one of the points that Gordon Brown is urging the government to do. When it comes to the Bank of England, he wants the Bank of England to promote jobs. We have been hearing from the likes of Andy Haldane and other senior economists over the past couple of months, but he wants them to do more. That was the Bank of England part. He also wants the government to launch more meaningful apprenticeships and youth training, boost childcare provision, and there are several other issues here. And now, I've got to say, we've spoken on this on the furlough scheme quite extensively on this programme, but it appears as if Gordon Brown is the most senior British official to back the extension of the furlough scheme. He was, of course, Labour Prime Minister, and he was the longest-serving Chancellor of the Exchequer in this country since peacetime. So he's definitely on his brief. He knows what he's talking about. And he's concerned that over the past 6 months, there's been talk about unemployment potentially rising from 1.4 million, where it is now, to 4.1 million at the end of the year, and nobody's doing anything about it. So he has launched this scheme, Alliance for Full Employment. It's got the full backing of some senior officials. So let's wait and see what comes of it.
Sounds like he's always speaking out for the right causes, actually. Well, let's talk a bit of aviation now. British Airways owner IAG is cutting more flights over the next 3 months as it adjusts to the continuing collapse in demand for air travels all over the world. That's what we're saying. But does this mean there is more job cuts coming?
I suspect there are more job cuts coming, and already we know that about over 8,000 people have already left British Airways. I know the talks are ongoing with union officials and IAG, and we're expecting about 13,000 people to go, and the aviation sector is the most hit sector when it comes to COVID. And the issue that BA or IAG are having, and not just BA, they've also got Aer Lingus and Iberia under their brand, is that it's been quarantine roulette. That's what some are calling it. Of course, they did start up in the early summer. A lot of people, in fact, hundreds of thousands of British holiday makers did jet out to Europe. But then, of course, they couldn't really take off their sandals on the beach before the British government were calling them back in. And that's really ruined or slashed hopes of a proper recovery. I think a lot of airline bosses had hoped that they would be flying at 50 to 60% capacity by September, but this has been cut short. And so IAG have now said that they are going to reduce their capacity to fly, and they don't think they'll be flying up to 40% of capacity. And that's really because people are just not booking the holidays because they do not want to risk being self-isolated. They have urged the government to take on some measures. One of them is to reduce air passenger duty, and the other is to try and find a way to test people at the airport to prevent them from having to self-isolate at home. But they're not the only ones to do this. I believe earlier this week, EasyJet announced that they'll be reducing their flying capacity, as well as Ryanair.
Juliana, thank you for those updates. I appreciate them. Domestic commodities market update is up next when we come back from this short break. Stay with us. Welcome back to Business Incorporated. Annual inflation in urban parts of Egypt eased to its lowest level since October 2019 as food prices fell. Data from statistics agency Campus shows on a yearly basis, consumer price index slowed to 3.4% in August, all the way from 4.2% recorded in July. Food and beverage costs, which account for the largest single component of the inflation basket, fell to 4.1% year on year. And Air Namibia plans to halve the salaries of employees who have been furloughed since March and hold off filling vacant posts as it battles a revenue drop worsened by the government's coronavirus travel ban. Air Namibia has been operating with about 57% of its workforce for the past 5 months, with cabin crew members, pilots, and general ground staff on furlough. Cash-strapped national carrier, which operates 10 aircraft and has about 800 staff, needs about 8 billion Namibian dollars to stay afloat. But the government has only offered a tenth of that in bailouts. And increasing disruptions to power supply from South Africa's struggling utility, Eskom, could hit mining companies' plans to invest. Now, mining in South Africa has been hit hard by the pandemic as lockdowns led to mine closures and miners contracted the virus. But a weaker local currency and higher metals prices cushions the impact of reduced output. Now, Eskom, which generates the majority of South Africa's power, has for years struggled to manage supply from aging coal-fired power plants and has imposed intermittent blackouts, denting economic growth and hurting business sentiment. And back home in Nigeria, which is one of the top producers of ginger in the world, the commodity ginger is well known and is on high demand in the country. Of course, we know that that is very possible around the markets, even though it is still quite expensive as a major commodity. However, the average yield of ginger per hectare of farmland in Nigeria is about 13 metric tons in comparison to the global average of an estimated 35 metric tons per hectare. To get a sense of the reasons for these and more, let's talk to Mayo Waige, a research analyst with Financial Derivatives Company. Good afternoon. Thank you for joining us on the program. Let's look at the yield per hectare of ginger in Nigeria, which is 60% lower than the global average for a number of reasons. What do you think is responsible for these? And if Nigeria's production was boosted, what will be the impact in terms of price and, of course, in terms of export earnings?
Thank you for having me. Two major factors responsible for this gap is the fact that we in Nigeria we use mainly traditional farming implements. So there's a low use of technology, and there's also the problem of poor access to quality seedlings. And then for ginger production, mechanization is actually very important. So you have Nigeria, for instance, being the third largest, and China and India being the first two largest producers of ginger globally. And in the case of, say, splitting harvested ginger rhizomes, you have farmers in these countries using machines for that. And in Nigeria, you have farmers using local knives. So all of this actually affects the efficiency of Nigerian farmers and affects their yield, because low efficiency would definitely impact yield and lead to low yield. And also there's also the problem of scarcity of farm inputs like fertilizers and chemicals. This affects ginger farmers. And also there's also something they can't totally control. Irregular rainfall affects ginger production. And in Nigeria, ginger production is mainly carried out in the north. Kaduna is the largest producer of ginger in Nigeria, and then you know that there's the issue of insecurity in Kaduna, and this affects how much output ginger farmers can actually get from their farmland. So these factors affect our output, our yield per hectare output. And in terms of our boosting our production, the demand for ginger globally has been increasing yearly, especially in European countries. People are beginning to the increase in knowledge of how the health benefits of ginger has been immersed in these days, and then you have more people realizing the health benefits of it, and so there's been more demand for ginger globally, and then so we've seen that even with China being the largest producer, we have countries like Peru increasing their production outputs, and that hasn't affected the price of ginger and made it decline. So if Nigeria boosts its production, it's not necessarily going to lead to a drop in ginger prices globally, because it's not going to lead to an oversupply of ginger, and it will be beneficial for our economy in the sense that, like, for instance, the ginger market is expected to be worth about $4.18 billion by the end of year 2022, and if Nigeria can actually get a large part of this revenue size, it will be beneficial to our export earnings, and then we will see an increase in our foreign reserves, and also the economy would experience a boost.
Well, maybe we should just do some more work in the area of getting off-takers to be able to help Nigeria benefit from the $4.18 billion. I agree with you totally, Mayowa. But let's look at the fact that the agri sector grew 1.58% in the second quarter of the year, while the entire GDP contracted by 6.1%, implying that the sector is actually less vulnerable to the pandemic effects and, of course, electricity disruptions. Talk to us about the advantage that this poses to these ginger farmers, and of course, what does it mean for them in terms of challenges? What are the challenges that could be confronting these farmers?
So the COVID-19 pandemic didn't necessarily affect production, because most farmers live in the rural areas, and the restrictions didn't necessarily affect how they moved around. And then most of our farmers, like I said, they use traditional farming implements, and they don't need electricity for that. So generally production wasn't totally affected, but then there was the aspect of distribution that was affected, because most of the farm products needed to be moved from rural areas to urban areas. And however, this mainly affected other food commodities. But for ginger, we actually heard farmers comment that they had recorded steady sales over this period. And then some of them even were wishing that they planted more. They knew this was going to happen and planted more. But so it's been actually beneficial to ginger production, unlike the other commodities. But then there's still the constraints that I mentioned earlier that they face, and this is something that is still affecting them even with all of this. So the constraints still stand even with this.
Mayo, maybe we should do more of ginger farming at our gardens and our backyards, actually. Thank you so much for those insights. I appreciate them. Mayo Waige is a research analyst with Financial Derivatives Company. Let's talk a bit about oil before we go, where prices slid today after U.S. data showed that the crude stockpiles unexpectedly rose last week, stoking concerns about a sluggish recovery in fuel demand as coronavirus cases continue to surge in many countries. U.S. West Texas Intermediate, which is WTI, the crude futures fell 0.63% to $37.81 a barrel, while Brent crude futures dropped by some 42 basis points to $40.62 a barrel after rising by 2.5% on Wednesday. Now, the oil market is under pressure on the prospects of both subdued demand and rising supply. The U.S. Energy Information Administration will release official weekly inventory data later today, a day later than normal following this week's U.S. Labor Day holiday, which we had very, very recently. And that's it on Business Incorporated today. Thank you for being a part of the show. I'm Temple Ashaju. I'll see you next time. Bye for now.